Okay, going through some mail, and I received this invitation to apply for a credit card. So let's take a look. A lot of people pay attention to this and this, okay? And this is all great. This is really good. And we love cash back. We love receiving points, right? But when you apply for a credit card, this is what you want to focus on. So let's take a look. We saw intro APR. So for 12 months, that means anything that you put on that card, you want to have that paid off within a year. After that, it pops up, okay? Balance transfer, APR, that's a good one to look at if you want to consolidate some debt, transfer some balances. So clearly, this isn't a card that you want to transfer balances to. What else? Default, that's a good one. If you miss a payment or if you are 1 or 2 days late, look at that. Your rate pops up to this, okay? And what does default mean? Fail to make a minimum or any minimum payment by the date and time due. So it tells you right here, late payment. Or make a payment to us that is returned unpaid. So you send the payment in, there's not enough money in your checking account, the payment is bounced back. Boom, this is what happens. And let's see, how long does that last? Tells us right here, indefinitely. So your interest rate will pop up to this indefinitely. That's very important to know. What else? Grace period, all right, 20 days. Okay, so when your statement drops, when you receive an email, hey, your statement's ready, etc., you have up to 20 days to pay that. Okay, so what else do we want to look at here? This is a good one, fees. So we did see no annual fee, but look at this, balance transfers, 5% of the amount of each transfer. Okay, so in other words, if you apply for a card and they are advertising 0% balance transfers for 6 months or 1 year or 2% interest rate on balance transfers, that's great. But you want to pay attention to the transaction fees, because this is saying even though once you transfer the money over, you'll have 0% interest, they're still going to charge you 5% of the amount of each transfer. Okay? That's really important. Foreign transaction fees, that's a good one, right? If you're traveling, going to Italy, France, Mexico, Cuba, wherever, 3% of the amount of each transaction. So you want to find a card, like I have a travel card, that charges very low foreign transaction fees, okay? And then penalties, look at this. So again, let's say you are a couple of days late on your payment, right? By accident, we'll say. Your interest rate will pop up to this indefinitely, and you'll be charged $39. So that's important. And then how's your rate determined? So it's a variable rate, and it's based on, look, the prime rate. The prime rate is tied to the Fed rate, and I actually may do a video on that. But you can just Google what is the prime rate. In other words, anytime you hear on the news, like actually, was it yesterday or the day before? Usually it's Tuesdays. The Fed did not change interest rates. So that meant that the interest rate on your credit card stays the same. If you hear the Fed increased rates, okay, that means the prime rate is going to go up, and that means that your credit card interest rate is going to go up. So it's this plus this. And that's what determines the rate on your card. So again, we have this stuff. Okay, yay. But this is what you want to pay attention to.